This conference will now be recorded.
This is me and I'm representing ABFX. Guys, first of all, a very warm welcome to all of you and a very happy Christmas to everyone. Fellas, as you know, that we are conducting like 4 webinars a week, and today is likely to be the third webinar, and the next one is going to be on 28th of December. So I hope you guys are enjoying our webinars and you're learning something new from these webinars. For all the members who are joining me for the very first, this webinar is particularly designed not only for the beginners but also for the professional traders. So let me tell you that the first webinar is normally conducted on, and that particular webinar is designed for newbies or beginners. If you have zero experience, okay, that is something which you should look for. And the next one is for professionals, which and in the professional webinars we speak about the trade setups, the trade opportunities that you are that you can take during the next week. And then there is another webinar which is also professional, which is conducted by myself. My other colleague Raj is the one who conducts the rest of the two webinars. So the thing is that while you are here, we make sure that you are learning something new. So ABFX makes sure that we are not leaving our clients behind. So just subscribe to ABFX and let's study the market together. So before I proceed for the webinar, first, today we are going to talk about why oil prices at 2018 low and what is likely to happen next. And in this particular webinar, we are going to explain what caused a collapse in the WTI prices. The WTI is West Texas Intermediate, and we are specifically speaking about crude oil. So this is going to be interesting to see. Like what were the major reasons, like the real-time reasons behind the drop in crude oil, and what is likely to happen next with the crude oil prices. So let's move on and let's take a look at the session's outline. So the first thing that we're going to see is we are going to talk about the top reasons why crude oil prices hit a 2018's low. And in these particular reasons, I have divided the webinar into these five steps or these five points. Like for example, there is a US and China trade war, which is highly impacting not only the crude oil prices but also the other commodities as well as the currency market as well as the stock market. So we are going to speak about like what is trade war and how this is impacting the global markets. And then we are going to see how sanctions on Iran has made a huge impact on the crude oil prices.
This conference will now be recorded.
All right, next we are going to speak about is how EIA stock report is impacting the crude oil prices, and then we are going to talk about how stronger a stronger relationship between the US dollar and the crude oil prices. So in this particular update, we are going to speak about how this impacts how dollar impacts the crude oil prices and what's the logic behind this. So when we speak about the logic of something, you will never forget the relationship between them, and every time when something is going on in the market, you will be the one who will be able to understand why it's happening in the market. Okay. The last thing, as usual, the last thing that we are going to do is we're going to have a question and answer session, and I would really appreciate if you post your questions in the question box by the end of this session. Let's say, in case you want to ask a question right now and wait, you can simply put your questions in the. Usually, we do have like 5 to 10 minutes of question and answer sessions, depending upon the number of questions. So just don't be shy and just place your questions in the chat box. So let's move on towards the next update. First of all, guys, taking a look at what's going on in the with the WTI and the crude oil prices. Taking a look at the chart, you can see that the crude oil prices has dropped down. Like it's a time frame when from September, because it's a monthly it's a monthly chart, and that just took a snapshot right now. And as you can see, 1, 2, 3. So this is for December. This one is for November, and this is October, and this one is for December. Back in September 2018, that is the time when everything reversed, and we are going to like see why, what were the fundamentals and what were the technicals that influenced and that caused a massive sell-off in the crude oil prices. For example, I can say that it is 50% down since then. Like within 3 months, this is almost 50% down from $80 per barrel to it has come down to place like near $40 per barrel. So it is half of the price that is was before back in September 2018. So let's find out the reason behind this. Okay, all right. So the very first thing that is impacting the market, guys, that is the trade war between USA and China. Okay, now what is trade war? Guys, back in time, there were like there were wars which were like physical wars where our armies were going and attacking each other's army, and we were trying to take over the other countries. But right now, like uh, the this is a new era, and we have new ways of like entering into the war, and now this is like a trade war. This is not this is not a normal war. This is trade war, and this triggered worries in the market. Investors are confused about how to respond to it. For instance, the US-China trade war keeps the market uncertain, and how it began. Basically, Trump is looking to hike the 10% tariff. First of all, Donald Trump, which is a president of United States, he sanctioned, not sanctioned actually, sorry. He applied tariff on the Chinese economy. He like inflicted 10% of tariff on the 200 billion worth of Chinese forex because US is facing a trade deficit. Okay, now what is trade deficit? Trade deficit is basically something exports minus imports. When a country have higher number of imports and has lower number of exports, this causes a trade deficit. And let's say if exports are higher and imports are lower, this causes a trade surplus. But the thing is that USA is facing, like, they are exporting less than they are importing, so this is causing an imbalance between their exports and imports, and ultimately causing a trade deficit. And one of the thing that USA is looking to do is to um, like limit their trade deficit. They are trying to reduce it. Back in 2008 to onward, the objective of USA was to increase their inflation rate. So they was like lowering their interest rate. They were applying the expansionary monetary policies. They were like reducing the tax rates because they wanted to accommodate the economy, because they wanted to increase the supply of money in the market. But right now, this is a bit different. What they are trying to do is the inflation is already in control, and right now they are trying to like reduce their trade deficit thing, and that is only possible if they successfully manage to reduce their imports. And in order to reduce the imports, the one of the tools that they were able to use was to inflict the tariff on imports. So everything which is coming from China, like the importers, whether they are corporate sector or whether they are individuals, they will be liable to pay tariff on their products. So which means that this is going to increase the cost of the Chinese products, which means that there is a probability that people will prefer to produce the product within USA. So let's suppose this was manufacturing, just for the sake of your better understanding. For instance, I was producing a product for $100, but the same product was costing me like $80 for $80 from China. So which means that I was preferring to import it from China because I was supposed to pay $80 and it was costing me like $90 or $100 if I produce it within USA. But right now, due to tariff thing, tariff and duties, the same product is costing me like $120, while I can still produce it within USA for $90 or for $100, which is way less than my new cost right now. So, which means that I will be less inclined to import from China. So I will be like uh, I will try to produce it within USA, which means that I will be hiring my people, which are in USA. I will be using resources within USA. I will be adding job opportunities within the USA. I will be like exporting rather than importing, which means that the one of the objective is to reduce the trade deficit. This way, if I'm exporting more and I'm importing less, this is going to reduce the widened trade deficit gap. So, yeah, this is what going on in the market for now. Like within Trump was very much ready to implement increase the 10% tariff rate to 25% on the 250 billion worth of Chinese products. But after the G20 summit back in December, they have decided to give 90 days to China, if whether to see if they are able to comply with the demands of USA. If that happens, that's good for both of the economies. However, if they fail to do so, there will be like a slowdown in the global economies. And China is considered one of the top consumer of crude oil. This is going to hurt the demand for crude oil. So probability of hurting the Chinese manufacturing sector, if like let's suppose the higher tariff rate means that people are not going to buy from China. Maybe they will buy, but the thing is that the overall demand will diminish. So if that happens, there will be less demand of Chinese products, and less demand of Chinese products mean that less manufacturing will be required in future, and the less manufacturing is going to cause a less demand for crude oil. So ultimately, the overall scenario, which is a favorable scenario, is ultimately impacting the crude oil prices. So that is one of the reason why crude oil is falling down and traded with the bearish sentiment. Speaking about the second one, Iran is considered the third biggest producer of crude oil within OPEC. OPEC is basically it's an organization of petroleum exporting countries, which includes the Gulf countries and all the countries which are like export crude oil. So Iran is on the top, on the third number on this list. So in September 2025, Trump continued to bid to sanction Iran's crude oil exports. Like they were saying back in September, they were saying that they are going to implement sanctions on Iran, and then they will never be able to export the crude oil. So this means that if Iran is the third largest exporter and the producer of crude oil from in OPEC, this means that if he is not exporting anymore, the supply level, which was like let's say ABC in September, will drop down. Like let's say if that was 20, it will drop down to 15 in December, because in November they were looking to implement sanctions on Iran. So, guys, as you know, this market is all about the sentiment analysis. So, based upon the sentiment, investors triggered the um, like demand for crude oil, like because they were expecting there will be a dramatic shortfall for the global crude oil supplies. So that generated a bullish sentiment, and that bullish sentiment caused investors to buy on rumors. So they were expecting that USA will apply sanctions on Iran. There will be disruption in supplies, and then based upon rumors, investors jumped in and they started buying crude oil. So the demand, which was caused by rumors or which was caused by sentiments, caused a massive buying in the crude oil prices, and the crude oil prices drove towards a 4 years high, which is 76.68, 76.88. So it is almost 80, right? It is almost 80. So after that, what actually happened, or what's the main reason why this fell down, is that after driving crude oil prices to peak, Washington granted temporary waiver to 8 countries, which includes China and India, the biggest purchasers of crude oil. Like they allowed Iran, it's fine, we are applying sanctions on you, but the thing is, you are able to export crude oil to 8 countries, which includes China, India, South Korea, Turkey, Greece, Japan, Taiwan. They will be able to get the crude oil supplies for next 180 days. They gave the exemption, right? So which means that everyone who are buying crude oil, expecting that there will be a drop in the crude oil supplies, was shocked, and they reversed their position, because this thing is not happening anymore. They were expecting the total shutdown of crude oil exports from Iran, but the thing is that this is not happening anymore, which is why crude oil prices took a bullish reversal, and it fell down from 76 level to 42 right now. So yeah, that is one of the that is another reason why crude oil prices are falling down. All right, so the third reason is the EIA reports. EIA basically stands for Energy Information Administration. That is the US organization or US institute which is responsible to give the stock buy report every week. Like EIA releases their reports every weekend or every week, mostly on Wednesday and sometimes on Thursday as well. So if you look at the figures, there has been, because in September, USA was expected to apply sanctions on Iran in November. So people started blocking the crude oil, they started securing their positions in the crude oil, which is why the increased demand for crude oil caused the increased demand for crude oil caused the bullish trend in the market for that particular moment, until and unless the market started giving the sell off in the market. So the thing is that at the same time the trade war sentiment was rising, and there was dual things, dual news available. So lately the US oil output was rising almost by 25% in 2018, and it went to a record high level of 1.7 million barrels per day. So which sparked the concerns that the supplies will destroy in near future.
This conference will now be recorded.
Lately when we had a webinar on the FOMC, and we had a webinar on the and its impact on the global markets. We spoke about like there is a negative correlation between the US dollar and the FOMC. And we spoke earlier regarding the FOMC. The Federal Reserve is applying contractionary monetary policies right now. They have hiked the interest rate 4 times in 2018, which is quite aggressive, right? So the interest rate hike is causing a massive demand of US dollar in the market, because everyone know that the contractionary monetary policy makes the dollar stronger, makes any currency stronger. So except USA, there is no other economy which is hiking their interest rate, rather like except like conversely they are keeping it negative. They are keeping it on near to zero. So which means that that gives us the idea that dollar is the only option. Dollar is on the upper edge, and dollar is likely to gain more demand in near future as well, because the 2019's outlook is also pretty strong, pretty hawkish from a rate hike point of view. So so which is why the stronger dollar is keeping the demand for commodities lower. For instance, the crude oil is denominated in dollar, which means that it is, for example, it is $80 per barrel. So which means that if I'm getting uh, 1 barrel for $80, and I had to pay like 100 PKR earlier to purchase $80. Right now, due to strengthening dollar, now I have to pay like 150 PKR of Parker rupees of like which is a currency of Pakistan. I have to pay like 150 rupees to purchase $1. So which means that this is making things complex for me. This is making crude oil expensive for me. So what I will be doing is I will be reducing my demand for crude oil, and I will try my best to purchase the crude oil only if I really need it. So in response, the stronger dollar caused massive sell-off in the crude oil prices. So looking at the here we go. So looking at the relationship between crude oil and dollar, you can see there's a monthly review. The dollar has been rising on a monthly chart, and the crude oil has given a massive sell-off, and that is exactly opposite. So negative correlation means that when one thing is rising, others should fall down. Positive means that both should go up in the similar directions. So it means that as soon as dollar gets more stronger, we may see further in the crude oil prices. All right, so the that's pretty much it, and I guess the only thing that we are left with right now is the a quick review of the technicals. Fellas, if you take a look at there, the market tried to violate the resistance level near the 6 area, but it failed, and and yep, right now the market tested this is a resistance, but right now market is pretty low, so we are not considering this as resistance. But the thing is, one, two, and these three massive selling or bearish candles are called like three black rows, which is a candlestick's pattern, and which is signifying that there is a very strong bearish bias for crude oil, and we may see further sell-off in the market. And lastly, here you can see that the intraday support is likely to be 42.30, and the violation of this level can lead the crude oil prices towards 32 level, and 32 level is the one where market got support in back in uh, like back in previous years, as like in 2019, 2009 market gained support somewhere around 30th June, and then market also fell down to to below 30, near 28, but the thing is the closing was above or near to 32. So for now 30 is going to be our next support level. So yep guys, that's pretty much it for now, and if you guys have any question, please feel free to share it with me in the question box. Amazing. Thank you so much for the feedback, and I really appreciate it. And guys, I hope to see you again in the next webinar. And until then, take care of yourself and enjoy your holidays. See you again. Bye bye.